It's time to dig into the world of banking and investing with a gripping story that will keep you on the edge of your seat, ladies and gentlemen. Gather around. Are you prepared? There is still optimism for Tesla stock in the upcoming weeks and months, despite the challenging start to the year. Wall Street is feeling upbeat following a rise from $108 to a more reasonable $177 per share. But there's a catch, so hang on to your hats. Experts are cautious about the effects of rising interest rates, even as one valuation method indicates that enthusiasm for Tesla stock is growing. So grab a seat and let's explore what lies ahead for Tesla shares. Permit me to make some initial remarks. I think things could be even better for you than you think if you're a tiny investor with only 2 shares of Tesla stock. Could you be heading for an early retirement? How much can you risk on those shares? Let's see, what are the chances that the value of Tesla shares will match what everyone anticipates? Now let's get started. Please hit the like and subscribe buttons before we proceed. Thanks to the market's recent strong reaction, Tesla investors are enjoying themselves greatly. The majority of January 2023 has seen an increase in the price of Tesla's shares. The price has been climbing steadily, with the exception of a small decline below $100 on the 4th trading day of the year. The stock price of Tesla increased. After the company recently released its 4th quarter financial results, which were better than anticipated, the company's revenue raised some initial concerns, but the results far exceeded them, sending the stock price skyrocketing. At $101.81, Tesla's price is approximately 55% below its 52-week high of $384.29, with favorable earnings results and a stronger than expected U.S. GDP. Equities have recently surged, although most companies, including Tesla's, fell below $170 on the most recent trading day. Tesla ended the day with a weaker close as the Nasdaq fell 2%. The stock is currently rising above the 50-day moving average and finding support at about $167. The 200-day moving average, which is $197, is below the net price, and $179 represents the first level of resistance. Now let's proceed. In a recent interview, Cathie Wood said that the pre-share price of $3,000 represents the lowest point in her Tesla price range. The eventual success of Tesla has been better funded, she noted. She specifically identified an increase in their market share between the end of 2017 and the present as the main contributing factor. Even though Ford, GM, and Toyota will soon be releasing electric cars, well-known investor Cathie Wood is extremely optimistic about one of her favorite companies, Tesla. Wood believes that Tesla is worth $1 trillion, which may seem high since the stock is currently trading below expectations and would need to grow significantly to meet Wood's estimate. Additionally, Tesla is rumored to be developing a completely automated ride-sharing network called the Tesla Network that will bring in enormous sums of money for the business. In an email to Tesla employees, Musk brought up ARK's updated pricing forecast and expressed his agreement with ARK's findings. It's possible that I could agree with ARK. If we did a decent job, he stated. Musk projected that Tesla would become the most valuable corporation in the world if its stock price hit $1,000 per share, valuing the company at $3 trillion. With a current market valuation of over $730 billion, Tesla Motors is the most valuable car company globally. Musk talks about the value of Tesla stock quite a bit. Musk tweeted to his fans in 2021 after Tesla's stock reached an all-time high, expressing his opinion that the price was too excessive. Elon Musk was sued by a board member and Tesla investor who said that the CEO's erratic tweeting violated a settlement signed with the SEC. In September 2021, Tesla suffered a roughly $13 billion loss as a result of his remarks. ARK Invest decreased its ownership of Tesla by less than 0.5% with the sale of 8,100 shares of the company's stock, which was valued at $5.76 million. However, even if the stock price increased, Cathie Wood had been buying a lot of Tesla shares lately as their price had dropped in late 2022. A sizable fraction of innovation-focused ETFs still have Tesla as their top holding. ETFs in the first flagship ARK Innovation ETF, for example, 10.9% of the portfolio is Tesla. Wood claims that the introduction of new electric cars from well-known manufacturers will support Tesla's strategy. Regarding the prospects for electric cars in China, she predicted a bright future. As of February, Tesla stock was up 3.1%, according to StreetInsider.com, following the release of a bullish report from investment banker Piper Sandler. Tesla finally made money after losing 2 days in a row. Piper Sandler showed some love for Tesla by retaining its buy recommendation and raising its price goal for the company to $750. This suggests that by the end of the year, new investors in the manufacture of electric vehicles could profit by as much as 55% of their original investment. Piper believes that future profitability and capitalization will result in higher earnings for Tesla. Adam Jonas, an analyst at Morgan Stanley, claims that Tesla is leading the race in the present electric vehicle industry. Using the analogy of a marathon, he asserted that Tesla was at mile 21, while the rest of the field was either at mile 2 or still tying shoes. Jonas believes that Tesla will have a stronger position as the race goes on, given the company's recent record-breaking car deliveries. Jonas increased his price estimate for the stock from $400 to approximately $430 based on his prediction that the automaker would sell more cars in 2023 than it did in 2022. Analysts saw Tesla's promise because of the company's operational know-how during the epidemic, when other automakers encountered supply chain delays and shortages of chips. Tesla was able to maintain production through software rewrites and supplier changes. Additionally, it opened 2 additional plants in Austin, Texas, and Berlin, Germany to boost manufacturing in response to the growing demand. These additional facilities will be added to Tesla's current facilities in Fremont, California, and Shanghai. The corporation will be able to raise production rates and earnings thanks to all of these changes. Tesla will have more opportunities to boost its gross margins with the new plants in Austin and Berlin. With the extra cash, the company can reinvest in network development, cost reduction, and customer service enhancements. It will take Tesla some time to achieve these heights. As the company's autos are mostly sold in the UK and Norway, among other countries, we have no doubt that Elon Musk will be capable of managing whatever problems the business may face down the road. It will be interesting to watch how they resolve these problems. For example, the cost of a Tesla car remains prohibitively high, despite government subsidies such as tax refunds for alternative technology. Before reviews or other discounts, a Model S's base price is over $85,000. The entry-level Model 3 from Tesla still costs a little over $40,000 before any tax breaks, rebates, or gas cost savings. Still, most drivers cannot afford it. According to Vertical Group analyst Gordon Johnson's calculations, Tesla lost over $14,000 for every Model 3 car sold in 2018, but these numbers will rise with more success. One of the first concerns for Tesla's management was the potential for their batteries to die and the scarcity of batteries to power their products. Currently under construction in Sparks, California, is Tesla's Gigafactory or Gigafactory. The company's battery problem needs to be settled in Nevada. With an estimated floor area of more than 1.9 million square feet, the lithium-ion manufacturing facility will help boost yearly Tesla vehicle production to more than 500,000 vehicles. It is currently unknown if the Gigafactory will be finished on time because regulations or logistical issues frequently cause delays for large-scale projects. The Gigafactory, which is expected to boost the state economy by $100 billion over the next 10 years, has received approval from the Nevada state government. The market for electric vehicles is becoming more competitive. In the coming years, a number of well-known automakers, including Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW, intend to release electric cars for sale to the general public. This intensifies the rivalry for Tesla's market share and opens the door for tech companies to enter the fray. To counter Tesla, Apple and Google have placed bets in the automotive sector. Though they still have a ways to go, rivals with a well-established customer base worry Tesla. The fact that Tesla is so far ahead of the competition is promising. If you now own Tesla stock, you might inherit a sizable fortune in the future. Do you possess a forecast for the price of Tesla stock? Please feel free to comment below with your ideas. Please remember to hit the like and subscribe buttons if you find this video to be useful. In the upcoming video, I'll see you.